Wall Street Beats, everybody. I am Steve Lamar, joined by our technical and financials pro, Kevin Bakes Baker, and our healthcare and biotech pro, David Maris. We're going to talk stocks this morning. I'd love to know what Bakes is thinking about this flush this morning. Yesterday's flush was bought. And Maris, I don't know what's on your mind this morning. What are you going to talk to us about?
Well, the XLV and the XBI, the two healthcare ETFs, the biggest ones, the XBI being the biotech one. And when I say ETFs, that's kind of like a group of stocks together. So it tracks the biotech index. That's down way more than the market today. I've been down about 3% the last I checked. And the XLV as well. So this idea that they're going to be super defensive was right up until yesterday. And then it didn't work yesterday, it didn't work today. So look, healthcare should be defensive. It's not, there's really, maybe the price of oil goes up a little bit. That's for a short period of time. For chemicals that go into drugs, it's such a small component. It's like 2%, 1% of an overall drug cost. Price of oil could triple and has no impact on drug prices. So I would say you're seeing a market flush more than you're seeing rotation or, hey, let's figure this out. I think we want to be in this sector or that sector. It's just, hey, listen, it's risky right now. This war might be expanding. So let's lower exposure to a little bit of everything really fast. At least that's how I view it. And that's how I view right now. I have very, very few things green on my screen. One of which is Viking Therapeutics, which I'm sure I haven't mentioned for a long time. But just to be clear on the obesity stuff that we've seen, because I do want to go talk a little bit about Novo. So I'm not, just to go back to that, the XLV and the XBI should remain defensive. I think we're seeing something. Would I pile in today because this is the greatest thing since sliced bread to do? No, you're in a very fluctuating situation, but it is defensive overall.
And if you don't own it and you've been thinking about it, is today a day to start nibbling?
Yeah, I think that's the same with the market and the same, because I don't think any of us are particularly good at calling overall market moves. And but if you look at pharma should be in a good spot and biotech should be in a good spot for the next several years until there's a new administration or they decide to revisit something that they've already settled with the industry. So I think that they're in good spot. I mentioned Viking, VKTX. I'm not short a lot. I haven't mentioned it in a long time just because it's such a small position. I have it kind of as a placeholder just to watch the obesity stocks. With Novo's drop, partially because they failed on, or one of their drugs came out and it wasn't as good as an existing drug. One of their development drugs wasn't as good as an existing drug. The stock dropped and they're losing share to Lilly. I've talked about this a lot of that. Lilly's the winner, Novo's losing. The oral drug, though, is doing exceptionally well for Novo. So today we saw an upgrade at Morgan Stanley for Novo. And a couple other bloggers are posting, hey, this is a good value name. Last week I mentioned, it depends on what type of investor you are. If you're a growth investor, yeah, Novo's not it. If you're someone who's looking for, hey, a cheap stock that probably is oversold, that probably is Novo. I'm not jumping into it. I think there's a race to the bottom on the pricing, but I could see where there's going to be a rebound. They're not a horrible company. They are number 2 in a very, very big category, but pricing is dropping. And that so their guidance for 2026 was for revenues to decline. Generally, a lot of growth investors are like, hey, I'm not big on decline. So that's why the stock kind of rolled over hard. I mentioned Viking. They're in a tougher spot, in my opinion. They have a follow-on drug. We don't know if it's going to be better or worse than existing drugs, but they also don't have a partner. And who's going to spend the billions of dollars to develop this drug and sell it? I don't know. I think that it's they're in a very, very tough spot.
That would have happened by now, right?
Yeah. So I did a forensic linguistics review of all their conference calls. And I put it up, I think I put it as a $10,000 report just because I thought it was so good. I didn't want people to really buy it, but I put it on passes.com if someone wanted to buy it. What I believe it shows is that over the last 2 years, the company was talking about partnerships, and the tone and tenor on how they changed is clear that they don't have a partner on their radar, that they're now going to go it alone, that, oh, look how good we are. Well, that's a very different situation. So I'm still short a very little bit just as a placeholder. I don't believe individual investors really should short a lot. It's just not a great thing to do. But this is one I just don't think works out. Now, I did want to mention a couple other stocks. One is Teva. Teva's had a great run. And I said a couple weeks ago that I'm just holding on to it. It's up 70-something% on my P&L, but up over 100% from when I brought it up on Wall Street Beats. I kept buying it as it went up because they're executing. They reported a really good quarter. They're going to be at the Barclays Healthcare Conference next week. I don't think there's going to be anything fantastic about it, but there's also a Jefferies conference. They're doing a dinner with Jefferies, I think, or with Mizuho or someone. So they're going to be out and about. So why am I thinking about selling a little bit if everything's going well? Sometimes it's a mistake to do that. But you know what? I'm up nearly 100%. I look at Hikma, HIK. They reported results. That was a disaster. You look at a couple of the other generic companies that have reported, not so great. Now you say, well, yeah, but they reported fine numbers. Well, yeah, it doesn't mean that everything shows up at the same time. Like if you're hosting a dinner party, all the people you don't want to show up don't show up together. Sometimes they come in
and sit next to you.
Yeah. So to me, taking a little bit off is always a good thing. Now, sometimes you'll look back and you go, oh, that was a bad thing. But you know what? You've made money, put it aside. So I might sell like a third.
And if you didn't take a little off and you got tagged, you're going to be kicking yourself for not having taken a little off. So I think it's prudent and it's psychological, and it's just I think that's a smart thing to do.
I can't advocate enough for you have a
We are. Oh, there we are. Okay.
There we are. There we're back.
That was a hiccup.
That was jolting.
Yeah, that was. I don't know what happened there, but okay. So I mentioned Teva.
Did you hear my plea to sell half when it's up 100%? Did you hear that?
Yeah.
Yes.
And I think it's everyone has a different approach to that, but I think everyone on our team has the same approach. I've not heard anyone say, "Let your winners run, just don't leave it alone." That's
never
true,
total.
right? Yeah, let it run, but doesn't mean you have to,
with the house money.
So
yeah.
I also mentioned I want to talk about Amphastar, which is also a generic company. They reported numbers and they missed, and they also sell a couple branded products. They missed, but what was more concerning is kind of how they missed and what they're guiding to. They're now going to do proprietary products, a little bit more of them, early stage development stage products. So here's a company that used to do hard to do generics, and now they're doing this, and they may be successful at it. A couple of generic companies have been successful in doing that. But what they need to really convince investors of, and I think it's going to be a little while for this stock to come back, they need to convince investors that we can do this, that they have the staff to develop this. I don't know if they have any MDs on their staff or anyone involved in those medical areas. The two founders are brilliant. They're absolutely brilliant, but they're scientists. It doesn't necessarily mean everything you do is great. So I'm cautious there. I'm going to be meeting with them next week to get a better sense of, do they have the capabilities to do this, or is this a wrong turn? So again, also missing numbers wasn't great for them. And then lastly, on EBS, symbol EBS, I blew out of it. And I had said on the show the other day that, they're reporting numbers, and I can't, if they blow, this is a company that promise that said, hey, listen, we're going to do okay. Look at our last quarter. Our last quarter is indicative of what we're going to do in the future. And I met with them. And when I say they promised, they never said 2026. They just said, look, I'll just tell you, our last quarter is really indicative of what we can do. Well, I guess you can do it because you did it, but that doesn't. Now I didn't own so much that
doesn't guarantee you're going to do it again.
I didn't own so much that I'm going to go find the management team again, but I will say that sometimes you know something so well that you go, okay, it's a miss. I'm going to stick around. This is great. This is a management team that's disappointed before, disappointed when they ran Valiant as a turnaround and it never turned around. And they had a couple stumbles here already. So you can say, yeah, it's cheap. So then yesterday, after I blew out of it, it's down 10, it's up 10% on a rebound. So as an investor, do you sit there and go, oh, you know what? Maybe I should just jump back in because this was just temporary. Everyone is different.
No.
I view it as you've disappointed me. You disappointed me on fundamentals. You told me one thing, did something different. I say told me. You told the street one thing. And your business is clearly much more volatile than you know it to be and I know it to be. So we clearly didn't know what we were talking about when I invested in it, didn't know what you were talking about. So I'm out. I might never mention it again. It's such an attractive, cool little company that I'm attracted to it because they sell defense things. They sell anthrax vaccine. So they're the only maker of it. So they have a built-in business. But if you go from a to a loss going forward, like last year was profitable, this year not, I don't know. A lot of things can go wrong when you're losing money. So when you're losing money, you don't have me. Yeah. So every investor is different. I like profitable businesses.
Yeah, put that
so
one
that's
in
it
your
for me in healthcare now.
Or actually, just cover your rearview mirror. Yeah.
Yeah. And by the way, a friend of mine who knows the management team was like,
Maris, a lot of people who watch this on a day-to-day basis love to get your update on HIMSS.
You guys are breaking up, so I don't know if it's me. I have a clear signal, clear as day. So.
Yep, me too. So keep going. Oh, there he goes.
What are we talking about?
I think we're going to talk about HIMSS. Can you pull that chart?
Okay.
I'd like to get Maris's update on. It looks like it's finding a base here. If you zoom out, maybe not so much.
Yeah, I mean, this is a logical place to stop for now. That's a poorly drawn line, but you get the idea. I mean, it's multi-year support, but tell me what's going to turn around. I mean, I understand how they're broadening the business, but if the ED business is tough and getting tougher,
and pricing and everything else is.
Maris has forgotten more about this than I know, but I mean, I go. There's so much to do. Why stop on charts like this? Why?
Yeah. And I think Maris has been avoiding it. David was about to give us his thoughts after Kevin Baker told us there are plenty of other things you could do in the stock market than fuck around with this stock here technically right now. So
I didn't use
David,
the expletive.
What would you say to that?
My mom watched the show. I didn't say that.
My apologies.
All right. Well, so HIMSS and hers. HIMSS House actually just came out with an update today. They track the credit card data, web search, all the rest. Row is still beating HIMSS and hers for downloads on the iTunes store or something like that. They check a lot of different data points. They said, though, this was the first month where things look a little bit better than they were before. and it's tracking their current revenue for the first quarter is tracking just a few $1,000,000 above Wall Street, and which is a few $1,000,000 above the company's guidance. Would that get me too excited? No, beating by just a little bit isn't what gets me excited. So I'd like to see kind of something more substantial. This is a stock that's just going to bounce around a bit, and until it stabilizes, I'm kind of not involved. I've said over and over, I think they're building great. I think that over time, there's a real need for a place that people and I hope they do build that. But we're in the early stages, so I'm gonna hang around here. Maybe see if we can get back to the original, whatever it was, 13, 14, even $15. But we're closing in on that, so I have to be careful. But I'm not in any rush. This is I think it's going to be a triple, but I just don't think you have to do it today. So
Away for now. You'll tell us when you start thinking about it again.
will
Mr.
do.
Baker, what's on
Hi.
your radar today? You watching these indices get re-shellacked this morning?
Yeah, and I
I mean,
started
a lot of
off.
a lot of
The
guys
first thing
a
I
lot of
wrote
guys
down
are
was,
really good at telling
discount
us
the
when to
first.
buy.
Sorry.
I said a lot of guys out there, stock prognosticators, are really good at telling us when to buy, but not so good at when to sell. Um, what are your thoughts on that?
Yeah, my discipline's imperfect, but it works. I mean, I had a number of doubles, and so I'm 20% in cash, and this hurts, but it isn't fatal. And I put down a note before I went to my other stocks ETFs I want to talk about, and said discount the first half hour to an hour. Feels like we're piling on as we talk here, and so the momentum is building to the downside. I'm curious to see what the last hour looks at. I just saw that we had cleric number two apparently taken out, and so I have a hard time believing that the bench is so deep in Iran that this lasts too long. But I'm no geopolitical expert, but I just have to believe that it seems like we can find anybody and take them out if we really want to, and I think that's what's going to happen here. Anyway, and as soon as you see a headline that says Strait of Hormuz cleared, you're going to be down 10% in oil. But let me talk about this because at 9/11. It was a pretty decent time to buy, actually, but it's too late to buy oil, in my opinion. And I know Morris and Marson are probably our colleagues are probably I don't know. Maybe they agree with me. Maybe they disagree vehemently. They've been in down here in the base. This is the XLE, and this is the monsters. This is 40% Exxon, Chevron, Conoco. I mean, it is about as
Big
blue
boys.
chip. Sorry.
Yep, it's the big
Yeah,
boys.
and but I keep coming back to this because you were on the show when we talked about Netflix. This is so far away from the tune today that it's so good it's bad. And I so you're gonna have a pullback here. I don't think it's going to be anything monstrous, but I just caution our subscribers, our members, you know, don't go into the knee jerk things. Now the defense stocks are ripping. The defense stocks have been ripping for 2 years, and so and this is the case with energy. This is the E&Ps, and I can look at almost any subsector of energy, of oil, and I just think it's too late. Now, maybe in the pullbacks down to here, you could pick some off. But I think if you're not in oil, you're late. And I think that the next risk is going to be Iran commander has taken the wrong phone call. He's dead, and the Strait of Hormuz is cleared. That's what I think. Is probably going to be the next one. I don't know that, but that's, as a stock market participant, it feels like that's a more likely outcome than this is going to continue forever and oil's going to triple digits again. I have a hard time buying that. Anyway,
and you think
so
that's really the trigger here? The trigger here really is the Strait of Hormuz being closed or too risky for anyone to want to try and go through. And as soon as that opens back up, you got less inflation concerns, less oil price concerns, less.
I think it's that simple. So the Strait of Hormuz is what people pull out when armchair oil and gas analysts, meaning people that aren't there all the time, they wring their hands and hold their, rub their brow, the Strait of Hormuz. Well, I would love to be in the room where Anduril and Palantir and the Department of War people are saying, how do we open this up the most efficiently? And I'd love to see how it unfolds. And I really like our chances. So again, I might be naive, but we managed to take out 40 leaders in an afternoon, and I got to believe we can do this as well. So I think this spike is understandable, but I think it's a spike that has happened too far away from the buy point back here in the case of the XLE. And so I don't think you buy your oil stocks here, and I don't think you sell them either, because I think the trend is inevitably up.
Right.
But I think that on a crazy day when I see an 8% up move that's tied to that headline, I'm going to fade it. So,
okay.
My next one is OIH. This is the energy services names. Look at this. I mean, that isn't catastrophic at all, but it's the same sort of thing. It's so far away from the 200-day moving average. It's so good, it's bad. And look at the long term. Now, the long term is fantastic, which is why I'm more constructive here. That's a breakout out of a base that Luis Yamato would absolutely love, and plenty of places for it to rest as we go higher. And this is Schlumberger, Baker Hughes, Halliburton, and that's 40% of this particular index. So you're basically buying Schlumberger when you buy this, which our people, especially Ben, have been on for quite some time. Marston's been on with Weatherford. He's made a bunch of money. He's already gone. So, stay tuned here, folks, because, we were on energy services before energy services was cool. And now I think you have to say, let's go find some other things to do with our 20%.
Even had Burn in the trade.
Yeah, no, sorry. Good question. Yep. My bad. She's so good at retail.
No, but it's just the point was it's not really her bailiwick, and she was, she was buying it. She got in there.
Yep. I mean, here's Weatherford. Weatherford has been a double more than a double off the low. And once again, we've got plenty of highlight reels, and we just flat make money for people. I mean, just that simple. Anyway, so I guess that's my main thing is don't do anything knee-jerk, especially today. I'm curious to see what 3 to 4 p.m. brings. And having said that, this is my name, ROKT, bought it here. And when you make 20% in 2 months, you have to expect you're going to get head handed to you some days. It's just the world doesn't work like that it just goes and goes and goes, and there are no setbacks. This is the Spider S&P what is this? Final Frontier ETF, and it owns like Planet Labs and Rocket Labs, and then after all that, it owns the Boeings, the Lockheeds, the Raytheons, RTX now, and so people with it, you see this breakout here yesterday on big volume. That's, I think, people late to the game saying, I have to own defense stocks. Well, look at this. You wanted to own defense stocks all the way back in here. So
right.
My and this is my name. I mean, I own this, but I'm not wed to anything. I just went through at the end of the month 5,400 ETFs, and I'm looking for anything that takes out my current 10, and stay along for the ride, because we had having a heck of a year, but it's March, so there's a lot of wood to chop.
But in these defense names, I mean, given the amount of munitions that are being deployed, and I mean, this thing to me this thing might have legs for a while because of just how much stuff we're shooting off and blowing up, and I mean, they got a lot.
Plus we've already
everything.
And we had a lot drawdown from the Ukraine war. We've shipped a lot of stuff there, so we're we probably have a lot to refill.
Yeah.
Okay. Well, here's Raytheon, and here's the this is going to be an imperfect line. Here's the roughly the Russian invasion, and they've benefited. We've discounted a lot of that. I just think it's late. And yes, there could be some upside. I just think there's going to be more upside in other places. And part of it is, and we saw this with Netflix, and I hate keeping coming back to that, but it really worked. When you get this far above breakout points and meaningful moving averages, it's tough to extend them. It's possible, but I don't think it's the way to invest.
So given the move in Netflix recently, Bakes, do you start, I mean, it stopped going down. Was that just a kind of a dead cat bounce off of this, take the M&A deal off the table, put some money in their pocket, thank you for the cancellation fee of almost $3 billion. And now what?
Yeah. And, and this isn't the game I play, but I think this is a logical place for it to rest at 104 or 5, something like that. But this is my point again. Here it is, and we talked about it. It's so good it's bad. Look how far above the 200-day moving average is. And then when they were, quote unquote, gonna lose Warner Brothers, here's as far down. That's about it's almost. Look at the symmetry, frankly. It's so bad it's good. And if someone had the guts to I didn't, I'll be full, and I can't buy individual names anyway. But yeah, this is a nice buy here on the bet that they walk away from the deal, and then they just start printing money again. And oh, by the way, buying a ton of stock back. I think it's a terrific company. It's a terrific long-term hold. I think the user interface is garbage after all these years, and I don't understand why that's not better. But that's a different topic. So I think it's a great own here, a great hold here. I think you're going to stall out at 103, 105, and then you're going to have to chop through all these people that have lost money over the last 3 years back here.
Yep. All right. That's good. That's good insight. All right, boys, this is getting long. Even though we screwed the pooch for about 20 minutes there with our technical difficulties. So unless you got anything more, let's wrap it up. Let's appreciate you guys jumping back on and giving us another shot. Looks like we finally got our tech issues resolved here an hour later. It seems to be running nice and smooth, just in time for us to stop. So thank you for following us on Wall Street Beats. Thank you, David Maris and Kevin Bakes Baker. We will be back here tomorrow. Have a great day.
You know what would be great right now?
Thanks, folks.
Steve, you know what would be great right now? An Einstein bar.
An Einstein bar. Indeed.
Oh.
An Einstein bar would
must
be good.
Must you taunt me so? See you, gang.
All right, guys.
Thank you.
See you guys.